Welcome to the deep dive. Today, we're tackling a really big topic, the current global economic landscape.
Yeah, it's a complex one.
Definitely. We'll be digging into it using insights from Marcus Krull, Volker Hellmeyer, and Mark Friedrich based on a recent online discussion they had.
Right, drawing from that Trumpster Sturt die EU video conversation.
Exactly. And our goal here, for you listening, is really to pull out the key insights, the surprising connections, maybe, and what it all could mean. We want to give you a clear picture of the forces shaping things without, drowning in jargon.
Okay, so let's dive right in. They kick off talking about the turbulence, right, in capital markets and these big geopolitical shifts happening.
Yeah, right away they're pointing fingers at tariffs and these tit-for-tat measures we're seeing.
Definitely sets the stage. And Kral, he immediately talks about these tectonic movements.
Tectonic movements. What's he mean by that specifically?
Well, a huge part of it is this new waves of debt he sees coming in Europe. Germany, he thinks, could be taking on, wow, somewhere between 1 and 1.8 trillion in new debt.
1 to 1.8 trillion. Just Germany.
Just Germany.
Hmm.
And then he extrapolates, saying if you look at the impact on European partners, the total new debt load could balloon to like 5 or even 6 trillion euros.
That is staggering. What's the fallout from that kind of debt? For markets, for people?
Well, Krow really hammers the impact on capital markets and, crucially, on savings. He uses this example. Germany's potential new debt. That's roughly 4.5 years of all German savings. Gone, basically, absorbed by the state.
4.5 years of savings. Just wiped out for other uses.
Exactly. And the big consequence, he argues, is that it leaves very little capital for private investment. It gets crowded out. Government borrowing just sucks up the available money.
Crowding out. So businesses can't get loans, can't expand.
Right. And that, he warns, can lead straight to deindustrialization.
Okay, so that's Europe potentially drowning in new debt. But the U.S. picture is different.
That's a key contrast Kroll makes. He points to a significant reduction in state-level debt in the U.S., potentially around $5 trillion overall.
Reduction.
About $3 trillion at the federal level, he estimates, and maybe $2 trillion at the state level, mostly driven by Republican-led states, apparently.
Yeah.
And if the U.S. is reducing its debt burden like that...
Then they don't need to import as much to finance it.
Precisely. Less demand for imports, which hits European exporters pretty hard.
Okay, and that brings us back to tariffs, doesn't it? Always tariffs.
Always tariffs. And the historical context here is interesting. Kroll points out that for years, EU tariffs on U.S. goods were actually much higher than the other way around.
Really? Like what?
He gives the example of cars. U.S. tariffs were around 10%, he says. But EU tariffs, once you factor in everything, could hit maybe 30%. So even with the U.S. recently bumping tariffs up to 25%.
It's still technically lower than what the EU had been charging.
That's his point.
Right.
Yet the EU is talking retaliation.
Kroll's view on tariffs is pretty unambiguous, isn't it?
Oh yeah, pure free market.
Yeah.
He thinks they're fundamentally destructive. He even used this slightly provocative analogy.
What about Jesus?
Yeah, saying even Jesus associated with thieves and tax collectors, Zollern, tariff collectors, implying that engaging with tariffs is dealing with something inherently bad, and they should just be abolished.
And he brings up Milei in Argentina.
Right, contrasting Milei's offer of zero tariffs with both the U.S. and EU against the EU's reluctance. Kroll basically says the EU won't give them up because tariffs are direct revenue for Brussels.
He's predicting the EU gets squeezed.
Ground down is his phrase. Between the BRICS bloc and the U.S., he thinks it'll force the EU towards zero tariffs eventually, maybe even leading to the end of the EU itself, which he sees as market positive, believe it or not.
Mark Friedrich had some specific numbers on that tariff imbalance too, right?
You did. Food. U.S. tariff 8.3%, EU 18.3%. Vehicles, U.S. 2.5%, EU 10%. So the numbers seem to back up that asymmetry.
But Hellmeyer doesn't think the EU will actually budge.
No, Hellmeyer's skeptical. He thinks they're too worried about losing face and too dependent on that tariff income. He called them, well, he used the word Zecken, ticks, basically suggesting they're parasites feeding off the system.
Wow. Okay, so pulling this together, it sounds like they're all seeing a massive shift underway, a fundamental change.
That's the core message, I think. They all seem to agree we're moving from a unipolar world, U.S.-dominated, to a multipolar one.
And this transition period is marked by what?
Deindustrialization, recession, a lot of economic uncertainty, geopolitical unrest, plus inflation still lingering. Basically, the whole global deck is being reshuffled.
And where does Trump fit into this picture, his strategy?
They see a very clear America First motivation. Hellmeyer and Kroll both stress his focus is on cutting the U.S. trade deficit. Big time.
Why the deficit specifically?
Partly domestic politics, they think.
Yeah.
Midterms, the next election. But the strategy involves, maybe deliberately, some short-term economic pain.
Pain like what? Weaker growth?
Yeah, weaker growth, fewer imports, fewer exports, maybe recession, market dips, all potentially aimed at getting lower inflation long-term and pressuring the Fed to cut interest rates.
Which could then inflate asset bubbles again.
Exactly.
Yep.
High-stakes game.
They also mentioned the Triffin dilemma. Maybe give us a quick refresher on that.
Sure. It's the classic problem when your currency is the global reserve currency, like the US dollar. To supply enough dollars to the world, you often have to run trade deficits, send dollars out.
But running deficits constantly can undermine faith in the dollar itself.
That's the dilemma.
Yeah.
It's why the U.S. has had these persistent deficits in outsourced production for decades. Trump's plan, as they see it, is trying to reverse that pull capital back with tax cuts, economic pressure, you name it.
And the appointment of Scott Bessent as Treasury Secretary fits this.
They see him as key. He's got, 40 years in capital markets? His big focus, they say, is getting the 10-year Treasury yield down, way down.
What's to hurt?
Below 3.5%, maybe even 3%. It's been bouncing around 4, 5, 6%, currently near 3.9%. And this is crucial because the U.S. needs to refinance something like $9 trillion in debt just this year.
$9 trillion out of a total debt over $37 trillion.
Yeah. So lower yields are essential. And Bessent's view, apparently, is that some short-term market pain might be necessary to get those rates down.
Interesting. Friedrich mentioned that economists in Europe seemed kind of surprised by Trump's moves.
Yeah, he noted a sense of maybe being caught off guard.
Yeah.
Among top economists in Germany and the EU, like they underestimated his willingness to act so decisively, perhaps.
Right. Okay, but let's pivot a bit. China. Obviously a huge factor in all this.
Absolutely central.
Yeah.
China's hitting back with its own tariffs, 37% on some U.S. goods. But the experts also note, the U.S. strategy to contain China isn't new. It goes back to Obama.
And China itself is changing its economic model.
Big time. They're shifting away from being purely export-driven towards focusing much more on their own domestic market, their own consumption.
How does that U.S.-China tension affect global growth overall?
Well, Hellmeyer has a really interesting take here. He sees global growth potentially slowing, maybe from 3.3% down to like 2.8% or 2.0%.
Okay, slowing growth. Sounds bad.
You'd think so. But he argues it could actually be okay, even positive, for nominal growth. That's growth including inflation and maybe even for equity markets, because that nominal figure could stay pretty strong.
Huh. How does that work?
His argument is fascinating. He says, look, the West might be deglobalizing, pulling back, but the global South, which he says is like 70% of the world economy now, is still globalizing.
So different parts of the world moving in opposite directions.
Exactly. He points to China's tech advancements, leading in many areas now, plus the global South's control over essential raw materials and resources. He actually thinks the U.S. America First strategy is rational for the U.S. and will probably benefit them initially.
But he thinks there's an even bigger disruption happening underneath all this.
Yeah, beyond just trade fights. Hellmeyer believes the truly major disruption is the U.S. basically acknowledging that the old multilateral system, international institutions, post-WWII cooperation, is fundamentally breaking down.
The end of an era, basically.
That's the implication. And if the dollar's role as the sole reserve currency is maybe eroding, the U.S. has to reduce its foreign deficits.
So the U.S. strategy becomes
Less state intervention, more focus on private sector creativity, cutting bureaucracy and taxes, and really zeroing in on energy independence and future industries. AI, energy-hungry sectors.
And he contrasts that sharply with Europe's approach.
Very sharply. He's quite critical of the EU, saying they seem to lack a clear plan for biotech, IT, and now AI, partly blaming their energy policies. He also hits them for not preparing for Trump's tariff, even though they saw it coming.
Unlike Argentina and Vietnam.
Right, who he says proactively offered zero tariff deals. He sees Europe as reactive and unprepared.
Okay, so given all this, uncertainty, potential pain, what does it mean for capital markets, for investors? Friedrich seems to be bracing for more downside.
He is. He's talking about another potential drop of 10%, maybe even 20% in the markets.
And his strategy.
He mentioned he's built up a big cash position, like 60%. He says he's lying in wait, ready to buy more stocks when things get cheaper.
He's also pretty scathing about the EU leadership, isn't he?
He really doesn't hold back. He suggests the EU bureaucracy actually likes tariffs because it's income for them. And he thinks politicians he names Habeck, Baerbock, Scholz, even Merz, just fundamentally misread Trump.
He had that anecdote about von der Leyen, too.
Yeah, linking her past role in German defense, which he saw as damaging, to her current potential impact on the EU's ability to function effectively.
Hmm.
He's incredibly blunt, basically saying the current leaders in Brussels, Berlin, Paris are mainly capable of destruction and need to be stopped quickly for any recovery.
Does Hellmeyer share that level of pessimism about Europe's economy?
He shares deep concerns, maybe phrased a bit differently. He worries about irreversible damage to Europe's capital base, losing those crucial hidden champions, those specialized German
It's a
manufacturers.
middle stand.
Exactly. He sees a risk of a really weak, drawn-out recovery in Europe because of political divisions and just general uncertainty that scares off international investors. He talks about Germany's industrial structure actually going backwards.
And he criticized economists suggesting deindustrialization is okay.
Yeah. He slams the idea of just accepting deindustrialization without any credible plan B for what comes next.
But Friedrich also noted that sometimes the markets have been surprisingly resilient, even with all this tariff talk.
He did acknowledge that, but cautioned that political markets have short legs, meaning political news can move markets short term, but fundamentals usually win out. He thinks deals are being made behind the scenes.
Like Trump being willing to negotiate. Vietnam.
Those are his examples. He also pointed to the fear and greed index hitting extreme lows like 6, which historically is often a buy signal.
Because major market shifts usually happen when everyone's euphoric, not panicking.
That's his point. So he sees the current correction more as a buying opportunity, suggesting buying in stages or tranches.
What about Bitcoin? They mentioned its surprising strength.
Yeah, that was interesting. Bitcoin holding up, maybe even decoupling a bit from stocks. They also mentioned global liquidity M2 money supply looking like it's turning upwards, which could signal a market shift maybe around April or May.
So short-term chop, but maybe a better medium-term outlook.
That seems to be the cautious consensus between Friedrich and Hellmeyer. Hellmeyer talks about nibbling into weakness.
Dimbling.
Yeah, buying small amounts as prices fall. He stresses how complex the global economy is and how companies often find ways to adapt. He also mentioned that U.S. imports were really high before the tariffs hit, which might provide a temporary cushion.
And he thinks Trump might be playing a game, start tough, then deal.
That's his theory. Overplay the hand, then negotiate, potentially leading to lower global tariffs in a few months. He also emphasizes the resilience of established companies. Overall, he seemed to think the global picture might look better in a couple of months.
And things like gold and Bitcoin hitting new highs support that view. Liquidity driving assets.
Exactly. Plus, a high VIX, the volatility index, often suggests the market is oversold. It feeds into that contrarian view.
The Warren Buffett quote.
Be greedy when others are fearful. Friedrich explicitly mentioned that. Even though he expects more losses, he's still holding about 40% equities because he sees it as a buying opportunity long term.
Crowell had a slightly different take on when things might stabilize, though.
A bit more nuanced, yeah. He thinks markets with flexible policies, like Argentina maybe, could recover faster than Europe, where he sees policy as rigid. He expects continued pressure on European markets because of that inflexibility, forcing the U.S. to keep the pressure on.
He also questioned if the U.S. financial elite really saw this market reaction coming.
Yeah, he suggested maybe the U.S. financial oligarchy, as he put it, didn't fully anticipate the reaction, and that Trump's ongoing friction with them could mean more market pressure ahead.
And he had that interesting idea about Trump maybe wanting people out of stocks.
Right, wanting people to move into U.S. treasuries instead. Why? To help push those yields down, which, going back to Besant, is crucial, given that massive $9.2 trillion refinancing need.
Okay, this leads us naturally into another really heavy part of their discussion. This idea of eroding trust, the role of the state.
A fundamental shift in the relationship between citizens, business, and government. Kroll puts it starkly. He thinks Trump's goal is the unconditional surrender of the deep state.
The deep state, that term carries a lot of weight. Does Hellmeyer agree?
He seems to. He talks about Trump pushing structural reforms against the neoconservative establishment or deep state, shifting focus towards Main Street. They both argue we need to look beyond just short-term economic data to these deeper structural changes.
And they see clear differences in how business-friendly certain regions are.
Definitely. They contrast places like Argentina now, Vietnam, China, which they see as increasingly pro-business, and the U.S. with the EU, especially Germany, which they paint as becoming less favorable.
Hellmeyer mentioned trust levels in Germany specifically.
He said trust between business and politics in Germany is at its lowest point since 1949. That's a shocking statement. He even linked economic stability directly to democratic stability, citing Germany in the early 30s as a warning.
Kroll talked about a new kind of distribution struggle, too, not just capital versus labor.
Right. He frames it as a struggle between wealth creators, entrepreneurs, workers, the self-employed, and a political class, along with connected groups who benefit from the system itself.
NGOs came up here.
Yes, he uses NGOs as an example, suggesting some might be siphoning off wealth from productive parts of the economy, sometimes with ties to politicians' families. He mentioned attempts to get more transparency on NGO funding being blocked.
And Hellmeyer contrasted that with the U.S.
Yeah, pointing out that U.S. government organizations like USI are apparently undergoing reforms. He then questioned the funding of some left-leaning NGOs in Germany, wondering if it's effectively hidden, maybe unconstitutional, party financing.
Friedrich seemed to agree, calling them propaganda arms.
Pretty much. And they both highlighted the huge sums, hundreds of millions of taxpayer money, going to party-affiliated foundations, with, they argue, very little transparency. Friedrich mentioned something like 4.8 billion euros flowing to these entities.
Kroll got quite specific with other examples of what he sees as political overreach.
He did.
Yeah.
He mentioned flying in Afghan migrants post-election, attempts to regulate lies by politicians he accuses of lying themselves, and even alleged state funding for Antifa, which he calls a terrorist group and an extended arm of the political class. These are strong claims reflecting their perspective.
Which brings us to another deeply concerning topic they raised, the digital euro and potential financial repression.
Yeah, Friedrich really sounded the alarm here. He started with the proposed Savings and Investment Union, or SUI in the EU.
The idea of accessing private savings for state projects.
Exactly. For climate, geopolitical goals, whatever. He was vehemently opposed. What the fuck was his reaction, I believe. He links this directly to Lagarde's updates on the digital euro.
Calling it a digital prison.
Or money prison. He sees it as a tool that could allow governments to impose forced levies, maybe war bonds, directly on people's accounts.
And the features being discussed sound controlling.
Very. Programmable money is the big one. Your digital euros could have strings attached linked to a CO2 budget. Maybe they even expire if you don't spend them.
Expiration dates on money.
That's the fear. Also, maybe a two-tier pricing system to push people towards using the digital euro. And even geo-blocking wallets that money only works within a certain area, like a 15-minute city.
So he sees it as an attack on everything.
Freedom, democracy, finance, cash, yes. Yeah. He mentioned a Politico editor who apparently came around to believing these warnings weren't just conspiracy theories. He thinks war bonds could be next, and warns about capital controls, maybe subtle ones like exit taxes first.
Hellmeyer shares this general unease about the direction in Europe.
He does. He worries about Eurobonds emerging, enabling a United States of Europe to take on massive debt collectively. He feels the developments of the last few years point towards more repression, less freedom.
He questioned who's really attacking democracy.
Yeah, flipping the narrative. He feels like freedom itself is being redefined, almost Orwellian style, becoming something suspect. He criticized the jargon, the restrictions on speech, via things like the Digital Service Act. Freedom, he stressed, is hard-won and vital.
And the wealth registry idea fits into this picture of control.
Absolutely. They see it as a massive privacy invasion, a tool to potentially target people. Hellmeyer expressed dismay at the lack of public pushback against what he called brutal measures. He worries about a breach of promise from opposition figures like MERS.
The fear is a shift from bottom-up democracy to top-down control.
That's the essence of it. Hellmeyer pointed to Manfred Weber calling for a war economy, without much public debate, as an example of this top-down direction.
Kroll was particularly strong on that war economy talk.
Extremely strong. He condemned it as war propaganda, even suggesting it might violate laws against preparing aggressive wars. Then he circled back to that Savings and Investment Union.
Right, the idea of accessing private savings.
He completely debunked the premise that there are trillions just sitting idle in savings accounts. He explained basic banking. Savings are liabilities for a bank money the bank owes depositors. That money is already invested as assets, loans, etc. It's not just sitting there.
He was critical of MERS's understanding of this, despite his BlackRock background.
He basically accused MERS of not being able to read a bank balance sheet, suggesting his role at BlackRock was more about lobbying than finance.
And who benefits from all this potential new debt, according to Kroll?
BlackRock, primarily. He points out their major shareholders in defense firms like Rheinmetall, the mechanism. BlackRock Intermediates buys bonds from states, sells them to the ECB at a profit. Risk-free, he argues.
So he sees MERS's program as enriching BlackRock.
Essentially, yes. And he reiterated the damage this debt does. crowding out private investment through higher interest rates, leading to low or negative growth, making the debt itself impossible to pay back.
So for Kroll, the digital currency isn't mainly about managing the economy.
No, inflation already reallocates wealth, he says. He believes the real purpose of a CBDC is suppressing dissent. Banking on cooks on speed was his phrase, a system built for control.
Debanking dissidents as a precursor.
Exactly. He sees the digital euro as debanking on a massive scale, allowing control via social credit scores, CO2 accounts, spending restrictions, and the EU wealth registry. That's the setup for mass expropriation, in his view. He's completely opposed to the state knowing that much about private wealth.
The potential consequences sound so severe that Kroll and Hellmeyer mentioned leaving.
They did. Kroll already lives in Switzerland, but Hellmeyer explicitly said he'd consider emigrating if these things happen in Germany EU. Hellmeyer then cited the huge capital outflow from Germany, $560 billion net outflow by 2023, as proof the economy is already dying.
A weakening economic core.
Yeah, he warned the economic cluster is thinning, risking a dam break, a sudden collapse. He criticized economists like Fracher again, saying basic economic realities seem to hold no sway in Berlin anymore. His assessment of the political elite was harsh, either intellectually shallow or malicious, but failing the country.
Kroll used that box analogy for the political system.
Right, a dysfunctional box or organizational structure leads to disruption, like he sees in the US. If disruption doesn't work, like maybe in Europe, it could lead to revolution. He hopes the elites see the need for change but doubts they can since they caused the problems. Elitism and negative selection over decades are key issues for him.
And they see a lack of effective counterforce in Europe. No powerful pro-market elite.
That's a major point Kroll made. Unlike the U.S., with figures like Koch or Musk funding opposition in media, Europe lacks that. He described corporations as often just extensions of the state, run by administrators, not entrepreneurs.
What about medium-sized and family businesses?
Medium businesses are crushed by bureaucracy, he argued. Large family firms, often run by heirs more interested in political ties than the business fundamentals. So there's little significant funding from these circles for real free market political change.
He gave some examples.
Yeah, a wealthy industrialist endorsing the Greens, companies warning staff against voting AfD. He sees a real absence of disruptive forces in Germany compared to self-made U.S. billionaires. Entrepreneurs are scared of repression or being discredited if they get political.
So little faith in existing parties, raising the specter of revolution.
That's the implication. Friedrich then brought up Milei in Argentina. Again, radical change born from total desperation. He cited Argentina's recent growth figures, falling poverty and inflation, capital inflows, booming stock market.
And Hellmeyer quoted Aristotle.
Those who implement reforms and enhance performance win the future. The big question left hanging, which party in Germany, if any, would dare to do that?
So as we wrap up, looking for that glimmer of hope, Hellmeyer's analogy was quite dark. A drowning person's final struggle.
It was unsettling, but his hope lies in the normative power of the factual. Reality biting back. He thinks the high expectations Europeans have of the state might actually speed up the decay and force change faster than elsewhere.
And he pointed to the rest of the world advancing.
Yeah, China leading in most scientific fields, the US and some, Europe, lagging. He drew the parallel to pre-WWI Germany, a science leader then. He says Europe needs a reality check, even if Berlin, Brussels are echo chambers. Pressure is building, he thinks.
Friedrich's hope seemed rooted in creative destruction.
Exactly, Schumpeter. Old structures must fall for new things to grow. Short-term pain, long-term gain. He sees this as a historic turning point, but thinks we need more pain first, as long as there's wealth left to redistribute. The warnings are there, but complacency is strong.
Argentina, again, is the example of desperation driving change.
Yes. He sees the old path leading only to decline. And he has zero hope in the established mainstream parties. Their priority is self-preservation, not reform.
And Kroll's final glimmer of hope, it came from comparison.
Right. Looking at other countries reveals Germany EU's massive untapped potential, held back by the political class. He contrasted declining living standards in Europe with huge income gains in places like Russia, attributing it to market policies, China, market reforms, the U.S., lower state share, even tiny Liechtenstein, free market.
He linked freedom and income
Directly, citing Heritage Foundation data. He believes Germany could see immense growth from digital AI revolutions, but the gains are currently eaten by taxes, bureaucracy, capital flight. the hope, getting rid of the parasitic, destructive political class.
The path involves crisis, the hologas.
Yeah, a difficult passage. But once through it, embracing freedom and technology could unleash huge prosperity. His final thought tied it all to energy.
How so?
Wealth and progress depend on efficient energy use. He slammed current German-European energy policy costing trillions, he claims is actively harming the economy, undermining competitiveness, and even contradicting its own environmental goals. True environmentalism, he argued, needs a strong economy. Current policies, he feels, negate responsibility.